A destination you assume is OKX, a price reaction you associate with those transfers. That's not proof of market manipulation. That's correlation plus narrative. Let's stress test this properly. At 1, are you even sure it's one wallet acting alone? Blockchain activity often looks like one entity, but isn't. Exchanges use batching wallets, custodial services recycle addresses, bots split activity across linked wallets. Without clustering analysis, calling it one manipulator is guesswork. 2. Is it actually going to OKX? You need to verify. Is that destination address officially linked to OKX, or is it just another wallet that later interacts with OKX? Big difference. Direct deposit, likely exchange flow. Indirect routing could be OTC, internal transfers, or even fake volume loops. Hap 3, dumping every hour. Are you checking net flow? You're only looking at outflows. Real question, how much is coming in versus going out? Is this wallet accumulating elsewhere? Is it redistributing, not dumping? Markets move on net pressure, not isolated transactions. 4. Price impact. Is it actually causal? You're assuming, open quote, wallet sells, price drops, close quote. But crypto markets don't work that cleanly. Liquidity depth matters. Order book absorption matters. Market sentiment often moves before large transfers. If 9,000 pi hourly is enough to kill momentum, then the market is extremely thin, which is the real problem, not manipulation. Nash 5, the uncomfortable possibility. You might not like this, but it's the more grounded explanation. Early holders, insiders, miners are slowly exiting. Liquidity is weak. Demand is not strong enough to absorb supply. So every visible transfer feels like sabotage. That's not manipulation. That's market structure reality. 6. About the bigger claim. Pi is reshaping the crypto economy. Right now, that's narrative, not data. Ask yourself, is Pi openly tradable on major exchanges? Is there transparent liquidity? Are prices discovered freely on the market? If the answer is not fully, then price behavior you're seeing is not a mature market, it's a constrained environment. Bottom line. You're jumping from, open quote, I see repeated transfers, close quote, .2, open quote, this wallet is manipulating the market, close quote. That leap is exactly where most people get misled in crypto. Explorer. For Pi, you'll use Pi Block Explorer. Paste the wallet. You can see the code in our conversation history, what you're looking for, transaction history, frequency patterns, counterparties, who it sends to / receives from. If you skip this and rely on screenshots or Twitter claims, you're already compromised. Number 2, check for official exchange labeling. Real exchange wallets usually have tags like exchange, hot wallet, deposit wallet, public confirmation from the exchange itself. Check OKX official docs announcements, their support pages or GitHub. Some exchanges publish wallet clusters. Hard truth, open quote, if there is no official label, you cannot confidently call it an OKX wallet. Close quote. Number 3, look for behavior patterns. This is where most people fail. A real exchange wallet behaves like this. Receives hundreds, thousands of small deposits, sends out large batch transactions, high frequency, many unique addresses. A normal or whale wallet sends large amounts to a few addresses, limited interaction diversity, repetitive patterns, like your hourly 9k Pi claim. If your wallet sends to only 1 to 3 addresses repeatedly, not typical exchange behavior. Doesn't receive many small deposits, not a deposit wallet. 4. Trace the destination chain, 2 to 3 hops minimum. Don't stop at, open quote, it's sent to X, so X is OKX, close quote. You must follow the funds 2 to 3 steps forward, see if they converge into a known cluster. Example logic. You can see the code in our conversation history. Only then you can say, open quote, likely interacting with OKX, close quote, not before. Number 5. Use cross-chain external verification tools. For more mature chains you'd use Etherscan, Arkham Intelligence, Nansen. But here's the problem you need to face. Pi Network is still a closed, semi-closed ecosystem. That means limited labeling, no robust public clustering tools, higher chance of misinterpretation. So your confidence level should always be lower, not higher. Number 6. Validate with exchange deposit patterns. Ask, does the receiving wallet generate unique memo tag requirements? Does it behave like a deposit aggregator? Exchanges usually assign unique identifiers per user, aggregate into central wallets. If you don't see that structure, be skeptical. Number 7. The brutal filter. Use this before making any claim. Before you say, open quote, this wallet is dumping on OKX, close quote, you must be able to answer yes to all. Is the destination wallet officially linked to OKX? Does it show exchange-like behavior, many users batching? Have you traced at least 2 to 3 hops? Is there independent confirmation? Not one is no, your claim is speculation. Reality check. Most viral manipulation claims in crypto fail at step 2 or 3. People see repeated transfers, price drops, and connect dots that aren't actually connected. If you have history, use PyBlock Explorer while reading this. Don't trust me blindly. Number 1. First layer, raw behavior, what actually happens. What you'll likely observe, repeated outgoing transactions, similar-sized transfers, your 9,000 pi observation, regular timing intervals. That feels like a bot or automated strategy, and it probably is. But here's the mistake. Open quote, automation manipulation, close quote. Number 2. Is it an exchange wallet? Critical test. Check. Does it receive hundreds of small deposits? Probably no. Does it interact with many unique addresses? Probably limited. Does it batch transactions? Unlikely. Conclusion. Open quote. This does not look like a primary exchange wallet. Close quote. So your original claim already weakens. Open quote. This wallet is OKX, not proven. Close quote. Even if it interacts with OKX at some point, that's not the same thing. Number 3. Flow direction. What is it actually doing? Now zoom in. Pattern you should verify. Wallet sends a small set of repeat addresses. Those addresses may forward funds, accumulate, split again. This is called a distribution pattern. Possible interpretations. 1. A single holder gradually exiting. 2. A routing wallet feeding another system. 3. Internal movement between controlled wallets. What it is not, based on current evidence. Open quote. A confirmed market killer. Close quote. Number 4. The hourly dumping claim. Stress tested. You said, open quote, every hour it sends 9,000 pi and kills momentum. Close quote. Let's break that illusion. A. Timing bias. Humans see patterns even when imperfect. Is it exactly every hour or roughly frequent? If it's not precise, it's not a strict bot schedule. B. Scale versus market reality. Ask the uncomfortable question. How big is Pi's actual liquid market right now? How much volume exists on real trading venues? If 9,000 Pi can move price significantly, then, open quote, liquidity is extremely thin, close quote. That means any medium wallet could move price, not just this one. So the issue isn't manipulation, it's fragile market structure. Number 5, the missing piece, net flow. Right now you're only looking at, open quote, outgoing transactions, close quote. You need to check, what does this wallet receive? From where? At what frequency? If it's also accumulating elsewhere, then, open quote, it's not dumping, it's cycling, close quote. Most people never check this, and that's why they get it wrong. Number 6, multi-hop reality. This is where your claim likely breaks. Trace this. You can see the code in our conversation history questions. Does C actually connect to an exchange cluster? Or are you stopping too early? Until you see, open quote, funds entering a confirmed exchange-controlled wallet, close quote, you cannot say, open quote, this is dumping on OKX, close quote. Number 7, stronger hypothesis, more realistic than yours. Based on patterns like this in crypto, a more grounded explanation is early participant or group, using automated distribution, possibly OTC style, moving funds through controlled addresses, not necessarily selling on open markets every time. This fits the data without making unproven assumptions. 8. What would real manipulation look like? You want proof-level thinking? Look for this. Sudden large deposits into verified exchange wallets, immediate sell pressure in order books, coordinated timing across multiple wallets, repeated spoofing, liquidity pulling. You currently have, open quote, a single visible wallet plus pattern recognition, close quote. That's not enough. Final reality check. Your narrative, open quote, this wallet is killing the market every hour, close quote. What the data actually supports. Open quote,